Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. This week we are going back to basics of retirement planning. Let's discuss how you can maximize your retirement income. First, doing some tax planning now can pay off later in retirement. For many people, retirement is not a time to slow down and stop. It is a time to explore the next great chapters of your life and build upon everything that you have learned and experienced so far. Another thing that does not slow down or stop is taxes. Understanding how taxes could affect your future cash flow will help you create an effective retirement income strategy. Second, know how your retirement savings accounts are taxed. Withdrawals from traditional 401k plan accounts and certain other employer-sponsored plans, as well as traditional individual retirement accounts, IRAs, will generally be subject to federal and state ordinary income taxes upon withdrawal. On the other hand, contributions to a designated Roth 401k account or Roth IRA are federally tax-free when you withdraw those funds, as are the earnings, assuming the withdrawal is a qualified distribution, which generally means it is made after a 5-year waiting period and the account owner is 59 and a half years or older. As for your non-retirement accounts, bond income and some of the dividends you receive from stocks and mutual funds may be taxed at your federal ordinary income rate. But qualified dividends and long-term investment gains are generally taxed at a lower long-term capital gains rate. State and local tax treatment may vary. You also want to develop a thoughtful distribution strategy. For some people, it will make sense to consider tapping taxable accounts first, then tax deferred. But depending on the circumstances, this order may not be right for every person. If most of your investment gains are from long-term assets held outside of a traditional 401k, IRA, or other similar tax-deferred accounts, you will likely pay long-term capital gains taxes, which are generally lower than what you pay on distributions taxed as ordinary income from your tax-deferred retirement accounts. You will also need to consider the impact of your retirement savings on your taxes once you reach age 73 or age 75 after 2032. That's when you must begin taking required minimum distributions, RMDs, from some of your retirement accounts, which is likely to boost your taxable income. And you want to avoid moves that could put you in a higher tax bracket. RMDs and other changes that bump up your income can result in what's called bracket creep, which is unintentionally slipping into a higher tax bracket. For example, you might receive an inheritance or sell some real estate. You might also slip into a higher tax bracket by taking a large distribution from a taxable account to renovate your home or buy a new car. A higher income can also affect the taxability of your Social Security benefits and increase your Medicare premiums. This is one reason you may want to consider funding different kinds of retirement accounts during your working years. For instance, you could diversify your retirement contributions and split them between a Roth and traditional pre-tax allocation. During retirement, you can manage the amount of taxable income you receive and make adjustments when necessary. You can also pay for qualified medical expenses during retirement with any health savings account savings you may have. Those qualified withdrawals are tax-free and will not affect your taxable income. Also, make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group LLC, a registered investment advisor. Private Advisor Group LLC and Cortburg Retirement Advisors Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.